Welcome back to the Insight Sphere. So in this video, we'll discuss Cathie Wood predicts that Bitcoin will hit $1.5 million by 2030. So let's see how realistic is this forecast. Cathie Wood, the CEO and founder of Ark Invest, is no stranger to bold market prediction. Known for her conviction in disruptive innovation and futuristic technologies, she has often been at the forefront of some of the most audacious investment forecasts. Now she's turning heads again, this time with a striking projection that Bitcoin could skyrocket to $1.5 million per coin by the year 2030. This projection has sparked both excitement and skepticism in the crypto community and beyond. The question that looms large is how realistic is this forecast and what does it mean for investors today? Cathie Wood's prediction comes as part of Ark Invest's latest Big Deals report, which outlines future growth trajectories for key technologies and assets. According to the report, in a best-case scenario where Bitcoin sees increased global adoption and becomes a mainstream financial asset, its price could hit as high as $1.5 million. At the time of recording this video, Bitcoin traded at approximately $84,000, meaning Ark's targets would require an almost 1,700% gain within the next 5 years. This equates a staggering compound annual growth rate of around 78%, which is ambitious by any market standards. Ark's reasons isn't pulled from thin air. The investment firm highlights several fundamental factors that could, in theory, justify such massive upside. One of the core pillars of their argument is institutional adoption. Since the approval of US-based Bitcoin spot ETFs in early 2024, Wall Street and large-scale investors now have easier access to Bitcoin exposure. This shift has added credibility and legitimacy to Bitcoin as an asset class. Institutions like BlackRock, Fidelity, and Vanguard have begun incorporating crypto offers into their investment platforms, potentially unlocking billions in capital inflows. Ark believes that if institutional investors allocate just a small percentage of their portfolios to Bitcoin, the price surge could be exponential. Another key driver, according to the Wood, is Bitcoin's growing role as a digital store of value. Often dubbed digital gold, Bitcoin is increasingly being recognized as a hedge against inflation, currency debasement, and global monetary instability. Unlike fiat currency that can be printed in unlimited supply, Bitcoin fixed maximum supply of 21 million coins, offering a unique scarcity-based value proposition. Following the April 2024 halving event, the Bitcoin inflation rate dropped below that of gold, further reinforcing its status as hard money. Ark anticipates that Bitcoin could eventually replace or supplement gold in central banks' reserves and high net worth portfolios around the globe. Ark Invest also emphasizes network fundamentals to support its bullish thesis. Bitcoin's hash rate, which measures the computational power securing the network, is at an all-time high, signaling robust security and miner confidence. Additionally, Bitcoin's on-chain metrics, such as active addresses and transaction volumes, continue to show long-term health and adoption. Meanwhile, Bitcoin's price volatility, while still present, has decreased significantly compared to previous market cycles. That is another sign of market maturity and stabilization. Furthermore, Cathie Wood speculates that Bitcoin's future could include broader use as a sovereign reserve asset in emerging economies. Several countries, particularly those facing hyperinflation or economic instability, may turn to Bitcoin as a way to stabilize their national economies. El Salvador's adoption of Bitcoin as legal tender is a pioneering example. If more nations follow suit, even partially, the demand for Bitcoin could surge far beyond current levels. However, despite the enthusiasm and strong convictions, not everyone is buying into our sky-high prediction. Many financial experts argue investors to remain cautious. For one, Bitcoin is no longer the fringe asset it once was. As its market cap and user base grow, its volatility and potential for massive gain naturally decrease. Achieving a 1,700% gain in 5 years for an already mature asset is a monumental task. Critics argue that Bitcoin's best growth days may already be behind it, and expecting another exponential rally could set unrealistic expectations for new investors. Another concern is that Ark's forecast may be based on overly optimistic assumptions about adoption rates and investor behavior. CAGR of nearly 80% for half a decade is extremely rare, even for emerging technologies. Historically, Bitcoin has indeed delivered outsized returns, but sustaining that level of performance becomes increasingly difficult as the asset matures and integrates into a traditional financial system. The The market dynamics are changing, and the wild speculative rallies of the past may no longer be feasible in a more regulated institutional environment. Moreover, macroeconomic and geopolitical uncertainties present real risks to Bitcoin price trajectory. Governments around the world are actively developing central bank digital currencies, which could compete with decentralized cryptocurrencies for mainstream usage. Regulatory frameworks are tightening globally, with increased scrutiny on crypto exchanges, stablecoins, and DeFi protocols. Another major policy changes or legal action could temporarily or even permanently derail Bitcoin's ascent. Black swan events such as global recessions, tech failures, or cyber attacks would also lead to some market correction. Despite these concerns, many investors still see merit in holding Bitcoin as a long-term asset with asymmetric upside potential. Even if Bitcoin doesn't reach $1.5 million, more conservative targets such as $250,000 or $500,000 still represent substantial gain from current levels. The level and key lies in managing expectation and approaching Bitcoins not as a get-rich-quick scheme, but as a long-term play in a rapidly evolving financial landscape. So the question is, should you invest in Bitcoin today based on Cathie Wood prediction? That decision hinges on your individual risk tolerance, investment horizon, and financial goals. If you believe in the decentralized economy and are willing to weather potential short-term volatility, a strategic investment in Bitcoin could be worthwhile. However, if you are seeking guaranteed returns or lack diversification in your portfolio, it may be wise to proceed with caution, or at least limit your exposure. So in my opinion, Cathie Wood $1.5 million forecast for Bitcoin is bold, visionary, and certainly headline grabbing, while it reflects strong optimism about Bitcoin's potential role in reshaping global finance. It is also filled with uncertainties and challenges that investors must carefully consider. As always in investing, the wisest approach may be to remain diversified, stay informed, and avoid making decisions based solely on a single prediction, no matter how compelling it may sound. Thank you for watching this video. If you like, please like and subscribe my channel and stay tuned till further updates.